right, let's get more on Exxon. For that, let's bring in one of the most accurate forecasters who follows Exxon Mobil, Pavel Molchanov with Raymond James, joining us right now by phone. So, Pavel, you've had a little bit of time to kind of digest the numbers from Exxon Mobil. The EPS was a 15-cent beat. What do you think of the quarter?
Yeah, I mean, pretty solid numbers. Certainly much better than Q1 when they missed because of some very poor refining numbers. This time around, actually, refining and marketing was really the highlight. They beat our downstream earnings estimate by more than 50%. Upstream earnings, so that's exploration and production, came in a little light. Production was a bit lower, but certainly downstream strength and chemical strength more than offset it, hence the bottom line upside.
Oil prices are up about 31% on average, too, from 2Q last year. Was that also a big plus?
Well, certainly on a year-over-year basis, absolutely. Of course, by the time we get to the earnings numbers, we know what oil averaged in the past quarter. But when we look at it from a year-over-year perspective, yeah, I mean, their earnings almost doubled from 84 cents up to $1.60. And in fact, sequentially, they also increased from $1.33, so that's about 20% increase, which is really a function of refining. This is a theme that we've seen across the board this earnings season among anybody that has exposure to refining. Big improvement. Whether it's sustainable is a different question heading into the back half of the year, but Q2 refining results were top-notch.
Pavel, I want to bring Scarlet into the mix because she's been going through Exxon's press release.
Pavel, I noticed that Exxon bought back 24 million shares in the second quarter. It spent at least $100 billion to buy back stock, but it hasn't really done very much for the stock price, which is lagging behind its peers. How frustrating is that to see production increase and to see the bottom line grow, but not see the stock price appreciate?
Yeah, I think that's a problem they've certainly had, in particular, since the XTO merger was announced at the end of last year. The fact of the matter is that is a dilutive acquisition for Exxon at today's natural gas prices, which are quite depressed. The good news is that now that the deal has closed, they are accelerating the share buyback run rate. So they did about $1 billion of buyback in Q2. They're ramping that up threefold in Q3, and I suspect that if oil prices stay strong, they have room to increase that even more. And that should, of course, by definition, increase their EPS numbers and ultimately get the stock price up.
Pavel, just got about 20 seconds. Important to note that this is the last quarter without the addition of XTU, that $25 billion acquisition, so something to keep in mind here when we go through these numbers.
It is the last quarter without XTO, so we know that in the back half of the year, they are going to be much more natural gas weighted than they have been historically. Again, that is not a positive given where North American gas prices are right now. But from somebody who's looking at the stock today, I would just tell them it's already in the shares. That should not dissuade anybody from buying it.
All right, good to know. Hey, Pavel, thank you so much. Pavel Molchanov of Raymond James Associates.